Fusion Mobile, quality e-learning experience on the go.
You're welcome to Fusion Mobile e-learning platform. I'm Olokobikwadimi by name, the accounting tutor, and we'll be looking at the single entry and the incomplete record. So, therefore, I will be treating the meaning of the single entry and incomplete record, features of single entry, and how to compute the profit in single entry system. So, the meaning of single entry and incomplete record. The single entry, the system of what? Bookkeeping, which does not conform with the basic principle of double entry. So, in this system, the application of double entry does not apply. So in every transaction, there is a single entry for every transaction. So the incomplete record is a system also in the single entry, whereby the record made by the accountant is not a complete one. So there is no record about the real and nominal account. The other account that are kept in this system is the personal account of the debtors and the creditors. So there is no real account and the personal account. We don't have an account for the sales and we don't have an account for the purchases. All we are going to have in such a system is going to be the assets and liabilities, and also we are going to have the personal account of the debtors and of the creditors. So determining the profit in such a system becomes a difficult task, because the records being kept in such a system will be an incomplete one. So the system in the single entry bookkeeping, in every single entry bookkeeping, the record being kept in such a system is always an incomplete one. So we're going to look at the features of single entry. The features of single entry. So in single entry, the application of double entry system is always lacking, so it does not conform with the double entry principle. And the second feature is that the personal account and of the debtors and creditors is always kept in this system, and also the real and nominal account is not kept in the system. We don't have any record as regards to the real and nominal account. So we don't have the account of sales and purchases, while also we don't have the account of expenses and income in the period. So in the system, no real and nominal account is kept in the system. And also, we're going to look at how to compute profit in a single entry bookkeeping. How can we compute profit in the system? So profit is calculated by comparing the closing capital with the opening capital. So if the closing capital is greater than the opening capital, there is a profit in the period. While also, if the closing capital is less than the opening capital, that amounts to loss. So if there is drawing in the period, so we have to add that to the closing capital, and thereafter the total of our opening capital to determine the net profit in the period. And if it's less than that, we have become a net loss in the period. So while calculating profits in the single entry system, the first thing we have to do is to calculate the closing capital, that is preparing the statement of affairs, that is in form of a balance sheet, to determine the capital, the closing capital. Also, we have to determine the opening capital to the statement of affairs. Also, then we compare the closing capital and the opening capital to determine the profit. So if we are able to calculate the opening capital, this is what we are going to do to calculate our profit. So we have the statement of profit. So we have closing capital, so we are going to add drawings, then we less additional capital if there is any additional capital within the period. So less additional capital, and also closing capital. So we less that, and they give us our net profit or net loss within the period. So this is the way we can calculate our profit or loss using the what in the single entity system. So we are going to have our closing capital. After we calculated that, we had our drawings during the period. So we less additional capital during the period and also the closing capital during the period. So to determine the net profit or the net loss in the period. So let's take an illustration on that. So we have an illustration. The following is the statement of affairs of Ujo Enterprises as at 1st January 1996. We have the statement of affairs as at 1st January 1996. We have the plant and machinery 3,000 stock. This is just our balance sheet. So we have the stock 1,000 debtors, bill receivable, we have the cash, then we give us 5,600. So we have the creditors, we have the bill payable 600, then we have the capital 3,000. So this is the opening capital. So on 31st 1996, the following were ledger balances. We have the creditor balance, we have the bill payable balances, we have the plant and equipment and assets, we have each of the balance. So it's joined during the period amounted to 800. We prepare the statement to show the closing capital and the net profit. So we can prepare the statement of affairs as at 31st December 1996. So we can prepare that. So we have our fixed assets. So we have plant and machinery, creditors, BPO, plant and machinery is a fixed asset. We have plant and machinery which is 2,500. The next thing we have stock, okay. Those are current assets. That is all about the fixed assets. So we can then move on to current assets. So we have stock. We have 500. We have debtors 1,000. We have bill receivable. Bill receivable 700. We have cash 10 naira. I think that is all. So thereafter we can add everything here. That gives us 2,000. That gives us 2,210. Then we can add this. We have our total, and that gives us 4,710. So now we have our capital, which we do not know. So we have current assets. So we have the current asset now, as current liability rather. Current liabilities. So we have the creditors. Also we have the bill payable. So the creditors is 1,500, while the bill payable is 800. Actually give us 2,300. So we can determine this as the total. So when 2,000, that gives us 2,300 rather. That gives us 2,300. So we can deduct 2,300 from this. That gives us 2,410. So that is our capital. So after arriving at our capital, we can then prepare the statement of profit to determine our net profit for the period. Statement of profits as at 34th December 1999. So you have our capital, that is the closing capital. We have the closing capital, which is 2,410. So add drawing. The drawings for the period is actually 800. Drawings during the period amounted to 800. So that is 800. So you have 3,210. So we don't have any additional capital. So let's opening capital. Let's opening capital. So that gives us 3,000. So the net profit in the period is 210. So net profit made in the period is 210. So that is how profit can be determined in the single entry pre-account. So one most interesting part about this topic is that we can also prepare the statement, the trading profit and loss account, that is the income statement, using this method. Although the single entry does not conform to the principle of double entry, and record in such a system is not complete, it's an incomplete record. So we can make such a record complete due to what the limited figures are available in such a system. So we accountants make use of our intelligence and think of way we can convert the single entry into a double entry system. So that was what we'll be looking at. We'll be looking at how actually we can calculate trading profit and loss. We can build trading profit and loss account in the single entry system that we can convert it to actually lead to a fully double entry system. And I'm going to give you the step now. The first thing we have to do is for us to calculate the purchases from the total creditor control account, and we can also determine the sales from the total debtor. So the second step is for us to calculate our total sales during the period through the total debtors control account, and hereafter we can prepare the trading profit and loss account because we have arrived at our sales and purchases during the period. So let's take an illustrative questions. So we have an illustration on how to convert the single entry into the double entry principle. So we have preparing the trading profit and loss account. The following is a summary of the cash book of Joe for the year ended 31st March 1999. We'll be given the cash book and the details in the cash book. We have the balance before forward in the cash book, cash from debtors, we have additional capital introduced within the period. Also, we have cash paid to supplier, we have the salary, postages, general expenses, we have drawings in the period, we have rent, same thing we have balance carried down. Then we are given the additional information, we have stock, at opening and at close, we have debtors at opening and at close, we have the creditors, we have prepaid accrued salaries, we have creditors, and when prepaid also we have that. You are required to prepare statement of affairs as at 1st April 1994, debtors and creditors control account, and we have to prepare the trading profit and loss account, and also we have to prepare the balance sheet as at 31st March 1995. First thing, let's prepare the statement of affairs as at 1st April 1994. Of affairs. Okay, we don't have anything like fixed capital, we don't have anything like fixed asset either. There is no fixed asset. Okay, let's begin from. So we have stock, which is 5,600, which is we have to calculate the opening capital, so we have to use as first. We have stock 5,600. So we have debtors, which is 12,020. Also we have accrued prepaid rent and expenses. Okay, we have the cash at the beginning. We have 23,430. Okay, we have prepaid rent. It's also an asset. which is 440. So we don't have any fixed assets in the period, so we can add everything together. Okay, we have our capital, current liabilities. So we have creditors at first, which is 9,800. We have creditors 9,800. So we have accrued salaried, it's also a liability. Accrued salaries. Accrued salary is 4,200. Okay, what else do we have? Nothing else again. Nothing else. So we can just calculate our capital. So we have 5,600 plus 12,020 plus 23,430, then plus 440. Then we have 41,419. Then we have 41,419. Then we can less that minus 14,000. That give us 27,419. That's how as the opening capital. We've calculated the capital. So the next question is total debtors and creditors control account. Now debtors control accounts. Total debtors control account. So we've done A. Now it's B. So we have so opening balance of debtors, which is 12,000. So we have balance brought forward. So opening balance of debtors, which is 12,000, 020. So the next thing is cash from debtors, which is in our cash book. The cash from debtors, so the debtors account will be credited. Cash from debtors, which is 182,350. Well, also we are given the closing balance of debtors. Well, also we are given the closing balance of debtors, which is 9,880. So we can have this. We can have this. So the closing balance of debtor, and that gave us what? 9,880. So that means for us to have balance brought down, as the closing balance of debtor carried down must have been here. So which is 9,880. So we can then add 182,350 plus 9,880. So we have 192,230. 192. No. Okay, 192,230. Now the differences we serve as our credit sales within the period. Then we can let 12,120 from it. That is 180,210. Is our sales within the period. Now we can also prepare our total creditor control account. Total creditor control account. We can do that now. So now total creditor control account, we have the balance of the creditors here, which is 9,800. Balance brought down or brought forward. Total which is 9,800. Opening balance of the debtor. So we have cash paid to suppliers. The suppliers account will be debited with the cash payments. So what we are doing now is as the usefulness of the word of the control account using calculating missing figure. So we have 110,560. So 560. Now we have balance carried down. So we have closing balance of creditors, which is 10,510. So which is we have it here. The next accountable as balance brought down 10,510. So for us to have that, balance carried down must have been here. So we have 10,510. So when we add it to 110,560 plus 10,510, we then have 121,070. 121,070. So that means our purchase must have been here. So minus 9,800. So we have 111,270. We serve our purchase in the period. Now we have our purchase. We have already been given the opening stock and the closing stock within the period. Now we are free to prepare our trading account. But now we have accrued expenses within the period, where also we have accrued expenses within the period, where also we have prepaid rent, accrued salary rather, and also have prepaid rent. So it's best things for us to prepare this account to know the total amount that will be taken to the profit and loss account. So let's prepare salaries account. Salaries account. So the salary account, accrued salaries is a liability. Accrued means owing. It means salary that is owing. So that is a liability. That will have a credit balance. All liabilities must have a credit balance. So we have balance brought down. So opening balance is 4,200. So the next thing is salaries paid during the period. The double entry is to credit the cash book and debit the what? Salaries account. So we come here cash. How much salary was paid? 10,800. So we have accrued salary again at the end of the period, which is 750. We can close that. We can then close this. So that means balance brought down as an accrued salary in the next accounting period is 750. And for we to have balance brought down, carry down must have been here. So that is 750. So we then have 11,550. So 11,550. So when we less that from that will be taken to the profit and loss account. So 11,550 minus 4,200. So we are going to take 7,350 to the profit and loss account. Thereafter, we can also prepare our prepaid rent account. Can prepare our rent account, credit and debit, to know what we are going to take to the profit and loss. So prepaid rent is an asset. So we are going to have balance brought down. I'm going to have a debit balance brought down. How much? 440. The opening balance 440. And we were told that the amount of rent paid within the period is what? It's 5,700. So the double entry is to credit the cash book and debit rent account. So we're going to have cash. So 5,700. And again, we were told that the closing balance of rent prepaid is what? We have a rent prepaid which is 670. Rent prepaid which is 670. So we are going to have a open balance here, balance brought down here in the next accounting period, which is going to serve as an asset. So for us to have that, we must have carry down here, which is 670. So when we add this now, we are going to have 440 plus 5,700. Then we have 6,140. We have 6,140. So having this, the difference, when we subtract that from the difference will go to the profit and loss account. When we subtract 670 from it, that goes to the profit and loss account, which is 5,470. That goes to the profit and loss account. Now we can prepare our P&L, trading profit and loss account now. trading profits and loss account for the year ended. The March ended March 31st and so. So we have opening stock. So the opening stock within the period is 5,600. So we have opening stock 5,600. So we are going to add purchase within the period. Add purchase within the period. We have purchase within the period is 111,270. So we have 116,870. So we've added purchase to it. What again? The next thing is to less closing stock. Since we don't have carry, we don't have return at all, we don't have any other thing. So less closing stock. And our closing stock is 3,400. So we are going to have 470. We are going to add 311. So this is cost of goods sales. So we are going to have sales. And the sales within the period is 180,210. So we have differences give us the gross profits. So 180,210. So we have 180,210. So differences give us the gross profit. So 180,210 minus 113,470. So we are going to add the gross profit as 1. So minus cost of goods sold. Then give us 66,740. So gross profit brought down. So we are going to have 66,740. Now, the next thing to do is to have all of the expenses. We have salary. Now we go to salary accounts. You know what we take to the profit and loss account? 7,350. Now we take to the profit and loss account. We have postages. Postages is what? We don't have any accrued or prepayment for postages. So our amount of postages will go directly. General expenses. We don't have accrued and prepayment on that also. We can write the amount of expenses, which is 12,040. So we have rent. So we have prepayment for that. Go to rent account. So we take 5,470 to the profit and loss account. Now, what is the next thing we are going to have? Do you have any other expenses? No. So we can calculate our net profit in the period. Net profits. So we have this 66,470. So we have 66,470. So we have 7,350 plus 2,400 plus 12,340 plus 5,470. Then we can subtract that from that, which is 66,740. Then we have 39,180 as the net profit. So we can prepare the balance sheet now, which is the last question. Can prepare the balance sheet as at March 31st, 1995, I think so. So we can prepare the balance sheet. We don't have any asset within a period. So we have stock. The value of stock at the closing. At closing we have stock. The closing balance is 3,400 at 1995. So we have debtors. The closing balance of debtors within the period is 9,880. So we have we have cash. This balance of cash at the end of the period is 98,000. So this is the closing balance of cash that we have to use, which is 98,980. So we have prepaid rents, which is this. We have prepaid rents, which is 670. So the next thing, we have our capital, opening capital, which is 27,000. The capital we calculated in the statement of affairs, which is 27,490. Now the next thing is additional capital introduced during the period. Additional capital introduced. This capital was being introduced within the period. 60,000 naira. We added to it. 60,000 naira. That will give us 87,490. Now the next thing, we have our current less drawings within the period. I think there is drawing within the period. So if we draw some goods, less drawing, which is going to be 25,000 naira. So we are going to have 2. We are going to have 6. Then we will have 490. So we have our current liabilities within the period. So we have creditors within the period. The amount of creditors within the period is actually 10,510. 10,510. So we have accrued salaries. The amount of accrued salary within the period is actually 750. So what other liabilities do we have? I don't think we have any other liabilities. We don't have any other liabilities. So we can add this. So that gives us 10,510 plus 750. That gives us 11,260. So when add this together, our account have to be balanced. So when added together, we must have a balanced account. So let's add total assets 3,400 plus 9,880 plus 98,000. So we have cash. An error. There's no profits, net profits. We refuse to add the net profits. Net profit within the period. We have to add the net profit before deducting the what? The drawings. So add net profits. An error. Add net profit made, which is 39,180. So 87,490 minus 39,180 is going to give us 126,670. So less drawings within the period, which 25,000, and that give us 101,670. Then we have current liabilities. So we have debtors, which is 9,880. So we have cash. Closing balance of cash at the period. I have not rubbed it off. So which is 98,980. So we have prepaid rent. Prepaid rent within the period is an asset. So closing balance of prepaid rent, which we have in the prepaid rent account, so 670. So I think that is all about the asset in the period. So we don't have any other assets. So let's go to capital. Go to capital. So we have capital that was introduced capital that was introduced within the period. Okay, that we calculated our statement of affairs in the period. That was 27,490. So there was an additional capital introduced in the previous question, if you can remember. So additional capital on the cash account, it has been rubbed off. So, and that was 60,000. So we have 87,490. Now add net profits within the period. The net profit was 39,180, and that gave us 126,670. So we can less our drawing within the period, and the drawing was okay, actually it's still there, 25,000. So we're going to have 670. We're going to have 101. So what is the next? So our current liability. So we're going to have our current liabilities. So our current liabilities. So we have the creditor. We have the what? Creditor. The creditor actually, credit balance, closing balance was, where is total creditor control account? Okay, we have creditors, which was 10,510. So also, what account we have? Okay, rent. Okay, salaries accrued, liability with 750. The balance, closing balance 750. So salary, accrued salary 750. So when we add that gives us 06211. So 11,260. So when we add that to that, so we can add. So we have 3,400 plus 9,880 plus 98,980 plus 670. So we have 112,930. So when we add 101,670 plus 11260, we have 112,930. So we have a balance account. So our balance sheet is balanced. So this is an interesting topic. So from single entry, we are able to calculate the profit by converting the single entry to the double entry principle that enables us to be able to prepare the trading profit and loss account, and through the conversion of the single entry by preparing the total debtor control account to calculate our sales, and also by preparing the total creditor control account to calculate our purchase within the period. So in this lesson, we are able to talk about the single entry principle that does not conform with the double entry principle. We are able to talk about the incomplete record, a system used in the single entry system of accounting, and also we talk about the features of the single entry. We talk about how to determine net profit from two balance sheets. We are given two statements of affairs. That is, we are given the closing capital and the opening capital. How can you determine the profit from that process? And also we did how we can prepare our net profit and by converting the single entry into a double entry system, and also preparing the profit and loss account. So if you are having any difficulties as regards to this question with it on the board or this lesson, do not hesitate to play the video, and the ones again, some exercises will be displayed on your screen. Do well to attempt such exercises for better understanding. Thank you.